Tech stocks are on fire. Apple, Microsoft, Meta, Google, their charts look less like growth and more like liftoff. But the question is why? Why are these companies exploding while the rest of the economy feels shaky? Well, the easy answer is AI. Everyone's betting that artificial intelligence will become the money-making engine of the future. And Nvidia, they're basically the oil company of this gold rush, selling the GPUs everyone needs. But here's the thing, it's not just AI. Behind the scenes, governments and corporations are spending hundreds of billions building out data centers. In fact, half of last year's US GDP growth came from, wait for it, AI infrastructure. Not from new apps, not from consumer spending, but from pouring concrete, stacking servers and cramming GPUs into giant warehouses. That's literally propping up the stock market. But here's the catch, most of these data centers aren't generating profits yet. It's all speculation. Money now, hope for returns later. Sounds familiar? Well, it should. We saw this with railroads, we saw it with .coms, we saw it with crypto and NFTs. Whenever there's a next big thing, money floods in way faster than reality can deliver. And every single time the bubble eventually pops. Here's what's different this time. Even if a bubble bursts, AI isn't going away. The survivors, the Googles, the Amazons of this wave will come out stronger than ever. The only question is which companies will be still standing. Here's what makes this even scarier. Right now companies are spending 300 to 400 billion this year alone on AI. That's more than any group of companies has ever spent on anything in history. But they're not making any money yet, so investors are betting on the future like it's already guaranteed. If AI takes off as predicted, this rally continues. If not, well, we could be looking at the biggest financial wipeout since 2008. But remember, bubbles don't destroy everything, they just wipe out the hype. The real innovators, they rise from the ashes. So why are tech stocks skyrocketing? Well, because investors think AI is the next electricity, the thing that powers every industry. Because interest rates are expected to come down, freeing up cash to chase the future. And because FOMO is real, no one wants to be the guy who missed buying Amazon at $10. But here's my take, this can't last forever. We're already seeing smaller and smaller jumps in capability from new AI models. Costs are skyrocketing, regulation is looming, and the hype machine is louder than the actual products we're using. That's why I think, yes, this is a bubble, but that's not a bad thing. So maybe the real question isn't why are tech stocks rising, it's who survives when the bubble bursts. Because history shows us bubbles always burst, but the companies that live through it, those are the ones that define the next decades. And if you're smart enough to position yourself now, you might just ride the wave without crashing when it breaks.